Okay, guys, this is a different topic today, how to enter trades using order flow and volume profile. Now, first thing that I do when I want to enter trades is that after I mark out my levels using the volume profile tool, I look for confirmation or wait for confirmation, and that tells me that the level is firm. Then, next time that price touches this level, I enter. Now, before we get into this graph, what is confirmation and how do I know the level is confirmed? It's pretty simple. If price has tested this level before and rejected it, that's one confirmation. And if price hasn't been, if the level hasn't been tested before, then we wait for price to currently test the level. So for example, in this chart right here, we see this volume area high, right? Created in this New York session. We see that we created it here. We went down, we tested this level, and we rejected it. So now I know when that's confirmation. That's a confirmation right there. Now I know when a price touches the level again, like we did here, we enter and we enter shorts. And what happened? We went down and we sold. So that's how confirmation works, and I'm gonna explain more details right now. So how do I know when to sell? So basically when price is near a volume area high, right? This is the red line, the VAH, and price rejects this level, this is a signal to sell because institutions do not want to trade above that level because price is in a premium zone, and also there's more liquidity to take on the downside. For example, this is another example totally different from this chart. This is another day. We created this volume area high from this New York session, right? We see that we tested, matter of fact, we created it here. We see that price tested this level once, tested this level twice, and tested the level 3 times, and it went down. And that's why that's a lot of confirmation to gather and understand that nobody wants to trade above this price. Nobody wants to trade above this price. So this is market open right here, as you can tell. Market open, and it just dumped down to the downside because nobody wants to buy above this level. So that's a really good trade, and that's basically how do you know when to sell. So again, I look and wait for rejects of the level, and then I enter the trade when price touches it again. Of course, on New York session. I mean, this strategy works. These setups always work on Asia, London, New York session, but of course I live in the United States, so I have to trade the New York session because that's when it's most comfortable for me to trade. But this strategy, as you can tell, it works in any other type of session. Now, same thing. How do I know when to buy? When price touches a volume area low, the val, and price rejects this level, this is your signal to buy. It's the same thing because institutions want to push the price higher. Why? Because price is in a discount zone. So, for example, this New York session happened, right? We created this volume area low. We were also next to a New York low, so that's we know that when price touches New York lows, New York highs, it bounces. But again, let's forget that. How did I enter a trade? This was market open right here. This candle right here was market open. So I know that price touched this level and it rejected it. That's once. Price touched this level and it rejected it again. That's twice, and it also touched the New York low. Right? Market open. Price went all the way down here and touched it again. And this is an actual trade that I took. I took this trade right here, and I caught about 10 points, making me $1,000. That's how I have confirmation to enter a trade, because this level was retested and retested multiple times. And of course I went up. And again, I look, wait for rejects off of the level, and then I enter the trade when price touches it. Again, it's the same thing as the volume area high or sell. Same thing for buying. And this is good examples. Now, why do we enter these trades? Again, volume is our footprint. It tells us where the business was done at each price. So the more volume the price range has, the stronger this level becomes. So high volume zones are more probable for rejections, and even more probable when they have been tested before. So I'm going to show you guys this chart right here. This is the volume area high, this is our POC line, and this is our volume area low. This is the New York session of today, literally today, March 12th. We can see that New York session, this is 8 a.m. This is the 8 a.m. candle. New York session open, I think it might have been around here, right? We literally bounced up and down from the volume area high, volume area low, and traded in this price range on the POC line, the point of control. Price, the institutions, they like when this happens. They like the consolidation because they think that this is a fair price to trade. So they go up and they go down. 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 Same movements. And these are scalps that I like to trade, that I like to take, because I know what the institutions are thinking. This right here is a liquidity grab, right? Or a manipulation. And yes, guys, I mean, it's pretty simple to understand. Institutions like to trade where there's a lot of volume happening. That's why we see consolidation today. Now, I'm gonna explain to you in a more simpler form, which I drew this little thing, this little graph. We can see the volume area low and the volume area high. This is the volume profile that we see. And this is the POC, the point of control. This is the big price range where it has the most volume. This middle line right here, right? Price, let's say price, and where we see my mouse, let's say price is right here. And we touch this level, I'm expecting price to sell and go back to the POC line, because this is the most traded zone. But when sellers take control and bring price down to the volume area low, this is supposed to be area, sorry, volume area low, I'm expecting price to go back to the point of control. And this is literally what we see here. Price, let's say price starts right here. We are on the volume area high. We go down to the volume area low. And then we trade in the point of control. And we go back up and we go back down. And we go back up. And again, it's the same thing. Why? Again, institutions like to trade areas where there's a lot of volume, because they think price is at a fair point. So again, but when price reaches the volume area high or the volume area low, they push price back at the fair point, which is the POC line. And this is the lesson today, guys. I hope you guys understand volume profile and the reason why I take trades. Again, if price is not at your level, for example, if price is right here, there's no reason for us to take a trade, because this is not close to, I mean, it is close, but it's not giving us any confirmation with our volume area low. And that's really it. I mean, you guys need confirmation and then a retest, and then you'll be set to take your trade. For example, this, if price would have touched this right here, and sold, that would have been a confirmation. And when the market opened, we would have touched this price, we would have sold, because that's what happens. But yeah, guys, I hope you